Tamarack investors, hello. We're here to run through the Avalon Apartments webinar, and we just got this under contract yesterday. We are so excited to be able to bring this to our group. We've been spending the past 8 months trying to find some properties in Tri-Cities that were off market, that weren't overpriced, and that can bring the investor returns that we want to be delivering to our group. So with that, first, this is a bit of a change of what we normally do. Generally, we have a live webinar so we can address any questions on the fly. It's been difficult to try and get everyone on the same webinar schedule. So what we're doing now is we are pre-recording this, sending it out so you can watch it at your own leisure. And then we're going to be having a handful of, we're calling them happy hour office hours. We're going to set up at various bar locations. People can drop in and out as their schedule allows, and they can chat about this deal. We can chat about prior deals, how they're going, or just overall market conditions, or anything that piques your interest. So those office hour schedules will be sent out along with this webinar, and we hope to see you there. So the first thing to know about this deal is we started teasing it and soft launching it last week. We're already 30% subscribed. Out of the 1.4 million, we got about 450,000 already lined up. There's a lot of interest and excitement to have great assets in Tri-Cities because it's such a high growth market that's going to be supply constrained over the coming years. This apartment came to us through a true off-market channel. One of our brokers that we've been talking with for the past 2 years, but haven't been able to get a deal done with yet, had been doing cold outreach to a number of apartment owners in the Tri-Cities market. They first connected with this owner a couple years ago. The timing wasn't right. They re-engaged them this summer, and this gentleman is 86 years old and wants to essentially get his personal investment portfolio simplified for his family when he does pass on. That creates a great opportunity for us to come in here, acquire this at a great basis. There were no other bidders on this asset, and we're able to acquire it and put the property to the highest and best use that this other gentleman didn't have the energy or interest in trying to maximize the value. So we're going to be doing that through our standard value add strategy. We're going to be able to put in about $16,000 per unit in cosmetic, new flooring, new painting, some exterior renovations, and a whole new appliance package. And with that, we're going to be able to get rents increased about 20%. And that increase in revenue and therefore profitability of the asset is directly what drives our ability to take an asset that's worth, $4.5 million right now and make it worth, $7 million in forecasted about 5 years. So these opportunities are difficult to come by. Off market is highly desirable, but difficult to find. And yeah, let's get into it. So first off, this is more of an informational webinar. We're going to send out a private placement memorandum to all interested investors that contains this information, as well as a full disclosure of all risks, known and unknown, that you need to use to make your investment decision off of. So starting off with our background, we have our three partners, myself, Casey Stratton, Tori Azure, and Max Schneider. And between us, we have experience on over 200 million in total assets that we have been general partners on. This has ranged everything from multifamily to office, retail, land development, and we're really bullish and focused on multifamily right now, but we got experience across all these different asset classes. This asset, I kind of already hit on this. We love the market, we love the value add opportunity, and it's taken us the whole of 2025 to get this this diamond in a rough under contract. It's a 33-unit Class B asset located in Kennewick. A lot of our investors live in Tri-Cities, and they've seen over the past, well, really for decades, but especially in the last 10 years, we've gone through supercharged growth. That's created a huge amount of demand for housing. And while we've seen tons of new construction, all the new supply, whether it's single-family housing or apartments, is barely keeping up with demand. And with the interest rate hike that happened in 2022 and 2023, that has really put a pause on new deliveries coming into the market. And so with that current forecast, industry and analysts are expecting vacancies to drop from about 70% right now to below 5%. And that's going to create a lot of pressure on housing prices, which housing prices and rents, which you always want to make sure they're affordable. And so I'm getting the numbers here later, but the important thing here is that this is a high quality class B, meaning workforce focused housing, that rents are affordable by the technical definition of rents being less than 30% of the median income. So one, that's affordable, we can get our tenants in there, but also there's upward pressure where current incomes can absorb rent increases. And that's important to make sure that we can achieve sustained revenue increases. Technical details, this investment opportunity is going to be a single asset investment. It's not going to be a fund or portfolio. We're going to have one apartment in here that is a multifamily asset. Like I said, workforce class B. Purchase price is 4.5 million, and we're raising equity of 1.4 million for that. All in with total project costs, capital improvements, this is going to be about 75% loan to cost. So we're right in that sweet spot of not being over leveraged, but also using leverage smartly to really get some good returns. We're looking at holding this property for 5 years and then selling it. We also have the opportunity to do a cash out refi. We'll be working with our investor group to decide what the desired outcome is and what the market is best supporting at that time. Our current underwriting pro formas are showing over a 2x equity multiplier. That means $100,000 in is forecasted to be worth over 200,000 in 5 years, which results in an internal rate of return of a very healthy 16.8%. And what we don't have on here is the average rate of return is over 20%. So very healthy returns. We haven't seen returns like this in about a year. So it's pretty exciting to be able to get an incoming price point that really supports some healthy returns. Our investment minimum is $100,000, and us as general partners get compensated through a 3% acquisition fee at close, as well as 2% of revenue ongoing, and then we do have a 30% profit upside share. So the Tri-Cities market, if you've been living here, you've seen the crazy amount of growth, 68% over the last 20 years and 10.5% of that over the past decade. What's really been interesting is that once we cross that 300,000 population number, we start getting on the maps of national employers who only want to open headquarters or offices or locations in larger MSAs, which are metropolitan statistical areas. Once we hit that 300,000 mark, we're on their spotlights, and that actually just further fuels growth. So it's a self-reinforcing thing. Like I said, we're expecting vacancy to drop below 5% by 2030. And we have high rent to income ratios, meaning that we're going to be able to continue to support rent growth over the coming years. We hit on population growth, forecasted to increase. I was actually on a county presentation on infrastructure, things that people really like to spend their free time on. But they were talking about over the coming 5 years, a forecast of over 30,000 new residents. And they were looking at how do we support this from an infrastructure standpoint, from new bridges, highways. If you're a commuter going up to Hanford, you've seen how the bypass can become a parking lot. But all of this is the city governments are continuing to try and get ahead of this anticipated population growth. I talked about how our housing is affordable. The average hourly wage in Tri-Cities is $34. And that results in, I got these numbers, I want to pull it up, I think about $6,100 a month in income. And our most expensive units on this property are the 3 bedrooms that we believe will rent out for $1,650, so $1,600 a month. And that is 27% of the median take home or income. Anything below 30% is considered affordable. And so at 27%, we are quite affordable. Most markets in Seattle, you're looking at those ratios being closer to 40%. So that means that we can have realistic wage growth that people can afford, and realistic rent growth that people can afford with their wages. Likewise, housing supply. There's been some new deliveries coming in. There's going to continue to be some deliveries, but with the current demand, it's barely keeping up. You've seen this in housing prices have increased. Rents have been healthy over the past couple of years, and vacancy is going to be dropping over the coming years. So this investment, I kind of hit on the numbers already. You can see here our 20% average annual return. This is our bread and butter value add play here. This farm's been owned by this older gentleman for a long time, and I actually have these pictures here. As you can see, these units are pretty much original. They've maybe done a smidge new flooring, but nothing in here has been extensively remodeled. And that gives us a wonderful opportunity to come in. $16,000 per unit is a very healthy capital improvement budget. We're going to come in, fresh paint, fresh LVP flooring, which is durable and easy to keep clean. Tenants love it. It looks great. We're going to be painting cabinets, putting on quartz countertops, the whole new appliance package in here, and new fixtures and cabinet hardware. We've done this standard package on about 150 units on different apartments, and we know how to keep controls in check. Max is an expert at running the subcontracting crews through here. Our other projects have been coming in under budget, and we really like the rental increase returns we get with this. It's a very high ROI investment to be making. There's a lot of info in here. I will say also that this investor deck is a bit more word dense than what we normally have for webinars. It's generally designed to be kind of read through on your own tempo, but I want to kind of give some additional context and flair on it. So this is a 3-building apartment portfolio or complex with 33 units. It's built in 1978. What's exciting is that it has new roofs. You can kind of see them here. The exterior stairwells were just completely, the wood ones were torn out and new steel ones were installed with new concrete and new landscaping. These are it's $350,000 of capital expenditure that had to be done to maintain safety, but they don't get you really anything in increased revenue. So the seller has already paid for this, and we get to get the benefits of it for years to come. That's really exciting because we can focus our improvement budgets on the interior remodels where you do get rent increases from it. Other than that, it's a garden style, which is highly desirable, ample parking, and they do have some amenities like a sport court with some basketball hoops, foursquare, picnic and barbecue. Yeah, when we did walk through, talk to some tenants there. They're very happy with the quiet nature of the neighborhood. I will say, actually, 2 other apartments on the street have recently sold, and we're seeing those owners put in their own improvements to the area, so the whole neighborhood is lifting up. The property, out of those 33 units, the vast majority of them are the 2-bed, 1-bath, which is the easiest unit configuration to lease out. You can get families in there or 2 individuals who want to be roommates. We also have 21% of the units being 3-bed, 1.5-bath, which we can get very good rental premiums on those. And then it does have a single 1-bedroom and a single studio. Location is in core Kennewick. It's just off of Canal, kind of by Clearwater. We've seen this place already built out. It's a great rental market, and there's not a lot of new land to be developed in this neighborhood, so it's landlocked and constrained in there. I'll hit on us real quick. Casey Stratton. I've been investing in real estate for over 10 years now, everything from duplexes to commercial, retail, office, multifamily. Also had a stint in motel conversions to apartments. I love this Class B existing asset value add strategy. I think it provides the best upside for the amount of risk you take on. There's never a time when you have zero revenue coming in, even while making improvements. And so you can kind of mitigate cash flow risk on that. Max Schneider has been a partner in Tamarack since we formed a couple of years ago. He's been in MBA operations for 16 years, and he runs all the asset management and the construction crews to get the value add strategy executed. Tori Azure is our freshest member. He joined us in June, and both Max and I have worked with Tori for, gosh, close to 8 years through different capacities. We both worked with him at Brandcraft, which Tori recently sold, which freed him up to come join us. He has a background in civil engineering and land development and wanted to get back into the real estate space. So it was a great fit. And he's come in as essentially our chief marketing officer and investor relations. So great team. That is the end of the presentation on that. If you had any questions that popped up, I'm always here. Feel free to reach out. We're also going to be sending out the schedule for those happy hour office hours. Hope you come down and meet with us in person. We love seeing everyone face to face. Grab a drink on us and let's chat, and talk to you soon. Thanks.